with over a decade of experience. She specializes in shorting stocks that gap, a strategy that is set her apart in the industry. Before trading, Melissa spent 17 years in banking and finance, working as a mortgage broker across multiple states. In 2008, she made the leap to full-time trading and never looked back. You probably have seen her on Fox Business, CBS, Cheddar TV, and RT America, where she frequently shares her market expertise. We're excited to have her here. Please welcome Melissa Armo. So, Melissa, I see here learn how to short on the side of institutional money in gaps. And I can see that short selling has enjoyed a whole new renaissance in the last month. We certainly have been doing a lot of it ourselves. So, where are you broadcasting from today?
I live in New York. I live in Manhattan. It's a little chilly today, but that's how spring is here in the Northeast. Some days are nice. Yesterday was 65 degrees in Central Park. Today is chilly. So, but spring and cherry blossom season will be here before you know it.
Well, I remember when I worked at Morgan Stanley, I used to walk to work every day, and one year or one day I had to walk through 2 feet of fresh powder.
Well, that's the thing about the Northeast. You get 4 seasons, but actually, I enjoy it. I enjoy it. So
Yeah, we get four seasons at Lake Tahoe also. It's quite enjoyable.
oh well, that's good.
Okay, you have until 5 minutes before the hour, and then I'll give away our last batch of prizes for the day.
Wonderful. Thanks so much for having me, John. Thanks for having me, Kate. Welcome, everyone. As John said, this has been a fabulous time to short. I short stocks. I short the market. I trade gaps. I day trade. And I buy puts. A put is an option, which is a short. So today we're going to talk about my method, what I do. If you have questions as we're going along, you can just plop it in the chat and I will see it. So today you're going to learn a little bit about what I do to see if you're interested maybe in trading with me and learning my method. We're going to talk about learning how to short on the side of institutional money and gaps. So what has been happening specifically in the market right now? Again, lots of people have been selling and some people have been shorting like me. So if you're interested, you can watch me on TV. I appear on every single channel talking about the economy, the stock market. Of course, tariffs has been a big topic as well lately too. If you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can follow me at The Stock Swoosh on X, Facebook, YouTube, or Skype. So again, it's 2025. We're already in the thick of almost halfway through March, okay? And the year is underway. You know, there was a choppy start to the year. Market was back and forth, made new highs, but now we're nowhere near the highs. So if you're someone that is trying to figure out where to go, where we're going next this week, you know, a lot of people have different opinions. Some people think we set the low for the year yesterday. Some people think that we're still lower. Again, I'm an active trader. I'm trading gaps, which is basically trading momentum. So when I'm doing an option, I'm looking for the fast trade, doing the weekly options. When I'm doing a day trade, I'm looking to get in and out in several minutes. But you need a plan of action to be successful no matter what you want to do. And if you start trading now, early enough in this year, you can change your future path for the whole year. So you still have plenty of time left in 2025. Even if you've not had a good start to this year, you can start trading and it can totally change everything that you're doing and learn something new, whether you want to do this part-time, full-time. Again, some people are trading with me full-time, some people are part-time, but the hours that I spend trading are very short. I day trade, the room's open in the morning between 9:30 and 10 a.m. Eastern time, that's it. And then again, I'll check my options during the day, but I'm not sitting and staring, you know, at my screen all day. So I'm mostly short. Why? First of all, shorting gives me an edge. Most retail traders go long. And even people that do short, a lot of them don't short more than they go long. People prefer, I have found out, to go long rather than short, and I'm talking about retail traders. And again, a lot of people don't know how to short, what to short, when. And I really kind of got into shorting very early on in my career because I did a trade and I made a lot of money in a short. I remember it was Netflix, it was a gap. This was a Netflix, was like $70 a share. And I said, oh my God, there's something to this. This is really fun. This is really exciting because you can make a lot of money quickly. Why? Because stocks fall way faster than they rally. And so does the market. You saw that on Monday. And you saw that actually a couple times in the last 2-3 weeks. So again, when panic comes into a stock or the overall market, something will go like that. Panic buying, which can happen, okay, we actually saw some of that last year after the election, like in Tesla, okay, there was almost like this panic buying where the stock price doubled. But panic buying is very rare. So usually you will see panic to the downside. And so I prefer to short. Now, I put the stats in here for 2024 through all of last year, so just so you can see where we're at for the whole year. Again, most of these trades, these are day trades that I call in the room, were shorts, but I did have some longs. And again, I risk an average of around $3,500 per trade. These are all trades on margin. You would have to have a margin account to do these trades. So last year's results was $901,138, again with an average risk of $3,500 a trade. This is 288 trades, 194 winners. There were 89 losers and 5 break-evens. So our win ratio for last year in the room was 69%. So this gives you an idea of where you would be with the year for me. My options are a mix of puts and calls. This was last year's stats for the whole entire year. I risk more money in my options. You could take one contract. You could risk smaller, but my risk is around $8,000 per trade. And again, the market right now, when I say the market, I mean the SPY or the QQQs, is kind of pricey. So, it's cheaper actually to buy a put or buy a call in the SPY than it is to do a margin trade, for example, in the market. Again, with the options, you got to get the timing right. We'll talk about that a little bit more later. Anyways, over 3.8 million for last year in options. Again, my risk is slightly more, and my win ratio for last year for options was 70%. It's a very active letter, and if you want to sign up for the options newsletter, there's no prerequisites for this. You do not have to have taken my class. So last year's results was over 4.7 million, and we're off to a good start for 2025. I do have the stats in here. This is not through the last 2 weeks, though, just through March 4th. In the room, 194,449, 73% win ratio for the room so far this year, and options I have in here, 513, 175. Again, this doesn't include the last 2 weeks. 68% win ratio. Again, the whole idea of trading is you have to have more winners than losers. If you're losing more than you're winning, you're not going to get anywhere with this. You're going to have a problem. So I developed a method to pick the stocks that have a high percentage win ratio of going in my direction. It does not mean that every trade I take works. I have some losers. Again, you see the losers here in the stats. But more trades win than work. I will tell you one option I'm in right now that's a loser that may not work is UNH. It expires on Friday. I'm in a put. That trade is down, and if it goes bust, that'll be the one loser we've had in the last 3 weeks on the options newsletter. So again, this is not for the last 2 weeks, but 707, 624 so far year to date of 2025, and this doesn't include a lot of trades we've done in the last 2 weeks where the market's been falling. And the big trade we had actually in the last few weeks is actually Tesla. So we've been shorting Tesla. We did not short Tesla today, but it has had quite a move to the downside. Again, some people love Elon Musk. Some people hate Elon Musk, whatever. The stock has taken a tumble, and it's really seen a massive sell-off to start the year of 2025. So again, what do? How do I figure this out? How do I make all those picks? I get up in the morning and I rate the gap. So I go through a process as a checklist. If you come and decide to take my class, this is what you're going to learn. You're going to learn how I rate it. I go through in the pre-market. So most people, again, I do the opposite of what most people do. Most people spend a lot of time thinking when they're in the trade, after they're in their trade. They think. I'm doing all my thinking before I even take the trade, before I put any risk at all, before I even put any money up or anything at all. So 90% of my thinking thought processes is before I even take the position. And then it's like 10% after that. So the thinking comes beforehand. I'm spending most of the time thinking, not after the fact. It's too late after the trade is on. And this is where the anxiety of a lot of people trade. When they're anxiety, they're like, oh my God. Because you should be thinking before you take the trade, not after the fact. So when I get up in the morning, I'm trying to decide if I want to do it. Do I want to do Tesla? Do I want to do nothing today? Not after the fact. Do you know what I'm saying? Think before you risk the money. That's the best case scenario. Somebody has a question here. So when you have a loser like Tesla, I don't have any losers right now in Tesla. What do you mean? We have had no losers in Tesla. But anyways, when I have a loser, do I roll it over? No. Marcia's saying, do you roll over a loser or buy it back for a loss and take the next trade? No, no, no. The loser I have right now is UNH, not Tesla. I'm not sure where you got the Tesla. We've been doing Tesla, and Tesla, we've been buying puts. So we've been making a lot of money in Tesla. In fact, one of the biggest trades I've called in the last 2 weeks is I called the 225 puts in Tesla. It went there on Monday. It broke it. That was an insane trade. Actually, you could still be in the trade. You could still be in the trade because that put expired on the 21st. Not that you would still be in it because it went. But the fact is, we're not losing in Tesla. We've been shorting it. We haven't been going long. And again, the loser I'm in right now is UNH. If we have time at the end, I'll pull up that chart and I can talk about that and I can talk about Tesla. But if you're saying if I'm in a trade that's down, do I take it out an extended period of time, another week? The answer is no. I don't roll anything over like that. No. If the trade loses, I lose. And you can go back and look at the stats. If I lose in an option, for example, I'm losing the entire amount that I risk, pretty much. I'm running it into the Friday. So could I win in at UNH? Sure. But at this point now, the trade is down, and it would have to gap down and run then and sell off for me to make money in that, for it to come back. It's got 2 days. But I'm not rolling anything over. Why would you do that? If a trade doesn't work in the time that you do it, what makes you think it's going to work another week if you give it more time? Nothing should make you think that. Do you know what I'm saying? So the reality is, you take the loss in some trades, you move on, you do another trade, you do another gap, you reevaluate, okay? So what I do is gaps, but it's momentum. Again, Tesla is such a great example of momentum. Actually, the market's a good example of momentum. Why? Someone was asking me earlier today, people were talking about corrections, this and that. People on TV love to say the word correction. They just love that word. They love that word as much as Trump loves saying he loves tariffs, actually. I hate that word correction. It has zero meaning. Again, I don't look at things based on percentages. People say, well, if we're 10% off the highs, we're in correction territory. What does that mean? Nothing. It means absolutely nothing. The fact is that the market is still in an uptrend. The QQQs and the SPY are still in an uptrend. So that's that. It has nothing to do with percentages. Have I done some puts in the market and made money, though? Yes. So I can still do something even if it's in an uptrend to the downside, and vice versa. Why? Because I'm trading momentum. And guess what? The momentum of Tesla has been to the downside. The momentum in the market has been to the downside too. Okay? In fact, we've made money doing nothing but shorts lately. I mean, absolutely no calls. We haven't gone long for weeks. Now, this was one trade here we did. Gosh, this was so early too. We did this Monday, 224, 10:09 in the morning. I called the 325 Tesla puts. It expired that Friday. Again, I'm doing the weeklies. Sometimes I'll give myself a cushion, but this went in the time. So let's look at it. 325. Okay, this was pretty cheap for Tesla, to be honest with you. 475 was a cost. Sold at $35. Profit was $60,500. This was a 637% return on investment in 2 days. If you held it into the last day, you actually made more. People always ask me that. My job is not to try to get the best exit. That's almost impossible. My job is to get the best pick, get the direction right, and get the momentum, which obviously this is. And I got out of this because the NVIDIA earnings weren't, and it could have flipped. It actually continued going then because NVIDIA sold off. Let's take a look at the chart here. So this was 224 here. Stock close here, gap down, boom. So again, I called the 325s. Take it over, see? Again, this is the momentum, boom. And this, I don't even have this up here, the current one in here. Again, I can pull up the charts later, but you can see where this went here into the 28th. It actually continued. It went down to 275. It was crazy. But actually, this was a good exit on the 26th here. So this is how you're making money. Doing this. And you know what? You could have bought one and spent $475 and made 6 times that. Here's 2 contracts of beginner risk. You could have made $6,000. Over $6,000. You could have made over $3,000 with one. Again, it's the timing of options. It's the direction. And then also getting the momentum to go. And again, I was just talking about why I like to short the panic. So really, if you want to do well and make a lot of money in the market, or any money at all, you have to get good at one thing. You have to become a specialist. So I learned this very early on, that I only needed really one trade a day to make money. And I'm looking to read on the side of institutional money, or what I call power money in the market. This brings momentum and opportunity. You're not going to get a stock like Tesla selling off 50 points like that in a week or more, or like what it did on Monday, for example. You're not going to get that without institutional money. It wasn't retail traders that made that sell-off. It was institutional money that made that sell-off on Tesla on Monday. And every trader on every level must learn the skill set of how to read price action, where direction is going. Because if you're trading on the side of what you could call it smart money, call it whatever you want to call it, then you're going to have less losses and you're going to have more wins. And you set your risk based on the size of your account. You know what I mean? You can risk more than I'm risking. You can risk less. But anyways, how do you figure all this stuff out? How do you do it? You got to learn the skill set. It's acquired through education. You think, you use your brain, you use your mind. You got to get good. It's like if you were playing a sport, if you were playing tennis or baseball or football or golf, any sport, you have to get good. It's just the way things are in any type of industry, any type of career. It's the only way that you're ever going to make real money doing this. When things are tricky, which they have been so far this year for 2025 for many traders, not as easy as it was just going long and buying every dip when the market was power trending up in 2023 and 2024. That's over. That's over. For people think that that's still happening, they better get a clue. That is full on over. Okay? You need to know how to do this, or you are not going to have a good year this year in 2025. You can say it's because of tariffs. You can say it's because of the Fed. You can say it's because of inflation. You can say it's because of 2 wars. Again, I have to talk about this stuff on TV, but that's not how I make trading decisions. Things are tricky. So you have to get honed in and focused and say, I have 100% conviction. Boom. And you need to know when to go hog wild. So when did we go hog wild? We went hog wild on Monday. We did a lot of trades and they worked and they went. Okay. And that's how you figure it out. Okay. Someone saying something about gap trading. Yes, that's what we're doing. We're talking about gap trading. Oh, so again, here's the market. So this was basically Monday. Okay. So again, let's go over what is a gap. Stock closed here, gap down, open, rallied, dropped. So again, you could have shorted the market on Monday the 10th, today's only Wednesday, or you could have bought a put, and you could have made money. Now, earnings season is not until April. So again, everyone's like, okay, what's going to happen? What's going to happen with this? What's going to happen with that? Anything that would affect the market, any earnings left here. There's a couple of things, Adobe's tonight. I'll look at Adobe tonight. We might do an option on that. I don't know if it's going to be a good gap or not. That's after 4. But again, we're at the end of earnings season. Earnings season is typically the busiest time to trade. Why are we so busy trading now? Because the market has been volatile. The opportunity's been there. And so we've been taking advantage of it. I'm even surprised how great trading has been lately. And again, it's usually during earnings season when it's busy. So if you think the market's going to, do something XYZ, well, what would make that happen? Again, earnings season isn't until April at this point. So all the big movers, the things that would move, that would lift the market or sell off the market more or whatever, none of that's going to happen until at least April. So everything that's going on right now in the market, specifically, or any market stops, has to do with all the other things that I've been talking about, the outliers that are affecting the market, things that are happening that create the gaps in the first place. So how can you earn a living trading? Number 1, you need a winning strategy. Learn first, okay? Number 2, you need a supportive mentor. Do and follow, okay? And then number 3, become an expert in one thing, and that's what I've done, which is shorts and gaps. Implement the strategy, get good, and then you add size to win big. Again, everyone wants to make a lot of money, but if you don't know what you're doing, you're not going to make any money. You don't have to necessarily have a large account to do well. Again, there's some people that just did the class last month that have already paid for the class because they've been doing well and making money, and they have what I call a medium to small size account. They're trading options. You need 25,000 or more to have a margin account unless you go prop. That's the only way you can get away from the 25,000 minimum. If you go prop, you can open up an account with like 5,000 and get 10 to 1 margin. Otherwise, you have to open up a cash account to do options. People love to do options because they can get away from the margin requirements, but the fact is the benefit of doing options is really that you can carry moves overnight, and you can get moves overnight, which can be huge, actually. So again, how do you make money in the market? Think about it. How do you do it? You determine who is in control. The bulls or the bears. That's it. There's only one control. Is it the bulls or is it the bears? If you're in the right direction, you're going to make money. And whether you hold it or get out whenever you want to, whether you do a day trade, whether you do an option, it's up to you. It doesn't matter. It's getting the right control, okay? Again, you have to get the direction right to win. If you get the direction wrong, you lose. QQQs. If you were long on Monday, you lost. If you shorted Monday, you had a huge day. So again, this sounds so simplistic, but you got to get the direction right. So let's talk about what is a gap. A stock gaps when the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So pretty much almost everything gaps. It would be rare that something wouldn't gap, but it doesn't mean necessarily that it's going to be what I would term a golden gap, meaning something that has a predictable gap, a predictable move. Here's one that we did. This was Target. Stock closed here, gap down, open, dropped. Closed up here, snug as a bug, over 120, 4 o'clock. Gap down here at 9:30, open around 117 and drop, fell, boom. And we shorted this. And we made money. This was back at the beginning of March. But this is a gap. Right there. Okay? Now that is a bearish gap. There are bullish gaps too. But again, I prefer to short. I focus on shorting. So what is a golden gap? A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. This is the system I teach in the class. You take the trade only in the direction of the gap when it rates 20 points or more. Otherwise, you don't do it. You do the trade as a day trade or an option. For example, today the market gapped up. We did no trades today whatsoever at all. The market gap up today was not a good bullish gap. It's actually not going to hold. So we didn't go long. If I thought it was good, if it was going to move the market higher, I would have gone long. It's not. And I guarantee you people went long today. It's not a good trade. It's going to fail. So if I don't see a good trade, I don't take it. If I see a gap, I'll rate it. If it rates under 20, then I'm just not going to do it. I don't do it in the opposite direction. Okay? So you need to focus. And my focus is gaps and shorting. And like I said, shorting gives me a niche, and you get such big moves when stocks fall. Again, I'm using Tesla as an example, but I could name a million things. Walmart's another one we did. That just fell off the planet. NVIDIA. There's just so many. Here's the Walmart. Look at this. We did this here. Stock closed here, gap down, open, rallied, dropped. Closed up here, again, 103 and change, boom. Gap down here in the morning, around 98 and change, open, fell. You could have done a day trade here, which we did. You could have bought a put, which we did. Could have got in, got out, could have held it all the way down. Okay? So again, this is a gap, and was a good gap. So how did I know? Because I got up in the morning and I rated it using the checklist. Again, I spend all of my time before I even enter the trade deciding if I want to do it. The thinking is before, not after. It's too late when the trade's on and the money's at risk. It's too late. And that is where the anxiety comes in for people. They second guess themselves. They question themselves. And that's problematic for people. And this is what's happening in this market. It's driving people crazy. The whipsaw in the market, the way that it's faking out, faking higher, faking lower, and again, all the stuff that's going on overseas and with the tariffs and everything else, that is creating the whipsaw. But again, I focus on shorting. I have a niche. When you think about it, there's no panic. You're like, oh my God, I have to do this. I have to go long Apple. I have to do it now. No, you don't. But if you're down in a trade in Apple, you're down money, for example. You're like, oh my God, this is terrible. I'm down. I don't want to take this loss. What do I do? I could be down more, and then you kill it. Okay. So again, the short side can have very, very large moves. The trades go quick. They go fast. I like to make money fast. And again, it's really a niche because a lot of people, for some reason, I don't know why. This isn't me. This is just I know this from teaching people for as long as I've been teaching people now, which I've been teaching people for 14 years. I've been trading for like 17. People just like they can wrap their head around the idea of buying a stock at $10, and then if it goes up to 11, they're up $1. But it's the reverse is the same. You can short a stock at 11 and exit the stock at 10, and you still make the same $1. So I mean, again, shorting isn't really something that people should be adverse to because it actually can be very profitable. But the rating system helps me determine who is in control. Who is in control, the bulls or the bears? Again, very, very important because if you can get on the side of the control, you're going to make money. So gaps happen in the market on a regular basis. However, some gaps are better than others, and some gaps are nothing gaps. And that can happen. And some gaps are very powerful displays of institutional money. The most important gaps of the market are gaps that signify a change in direction or a bigger move in the same direction. Understand which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you will know when the power of money will flow to pay you. So you got to learn how to read the footprints of institutional money, because you're never going to move a stock 10, 20, 30, 40, $50. Never in a million years. And all the stocks that I trade, they have volume. You've heard of them. You know the companies. They're familiar. We don't trade low float stocks or penny stocks or things that are too cheap or you can't get filled or any of that crap. We're trading stocks that are, what I call foundational, where you're like, you can understand what this company does and what it is, and you can see how institutional money, when I say institutional money, I mean large banks, big professional traders, hedge funds would want to buy the stock or short the stock, okay? So again, it's so easy when you're on the right side of that. It can rip up, or it could just sell off like a hotcake. And again, I will go long, but the time to do that actually has not been the last few weeks. If I short gap downs, don't you find you missed a large chunk of the move? No. You're saying something different. You're saying, I'm just going to go back here to a chart of something here. Walmart had earnings. You're saying if I didn't short this here into the close, that I didn't get this move. How did I know that would happen? I'm not a psychic. Sometimes it seems like I'm a psychic with some of the calls I've made in the Teslas and other things lately, but the fact is I'm not a psychic. I would never have known this would have this reaction after the earnings. It could have been up at 200. So why would I buy a put here? So I'm not predicting the gap, if that's what you're asking me. I'm not a psychic. You wait to see the gap, and then I'm predicting that the move will continue either up or down. But in this case here, I predict that it would move down, and I was correct. So there's no way to predict this. Now, will I sometimes be in a trade? I'm just going to go back here. Will I sometimes be in a trade that I get up in the morning and I'm up in because it actually continues and I'm already in it? Yes. And that happened in the market because I've been in puts in the market long before Monday. So I got paid very well this week. But I was already in it and I was holding it. So that's not, and this wasn't any kind of like earnings or anything or whatever. Like this is like I was already in the trade. But again, this is just talking about this example. Target's another one here. Like I would have had no idea what this would have done on the earnings. And this was an earnings play. Could have been up here. So how would I know to short this? So no, you're not missing a large chunk of the move. And even if you would miss a chunk of the move, in your mind, you're like, oh my God, I could have made an extra $3. You don't know that to be able to predict it. You don't have that information, so you can't make an accurate decision. The system works with a high level of consistency and high wins because of the accuracy and the read of the rating of the points. I'm trying to become accurate. I don't want to lose that often. So it's more about accuracy than capturing this $4 that I didn't get there. I'd rather wait, make sure it's good, and then do it. Does that make sense? Okay, where was I? You can get them anywhere, Dan. That's not, finding stocks that are gapping is not difficult. It's the rating system to determine the direction to go through the 26 points. That's what's the meat and potatoes. That's what you're paying me for if you sign up for the class. That's what people don't know and don't understand. You can't short every gap down, and you can't go long every gap up, and you can't short every gap up, and you can't go long every gap down. And even though people have in their mind that gap fills work, they don't. Over the long haul, they do not consistently work to make money. Yes, there have been some times that the market has done what people quote a gap fill in this year. It is not something that I played. It's not something that I do play. And it's not something that you should ever play because it doesn't have a high consistent win ratio. So finding gaps is not the difficult part, Dan. There's gaps all over the place. There's gaps every day and everything. The idea is to find the good ones where the institutional money is going to take something and move it in a big direction where the move itself, whether it's to the upside or the downside, is predictable. It's the predictability that people don't know how to read, okay? Anyways, this is what I was saying. Knowing how to read what institutional money looks like is essential to becoming a successful trader, and you can win big on trading on the side of power. And you don't really have to have a big account to do it, because you can take one contract and an option and do very well. But it's finding it that a lot of people don't know how to do. So again, here's the Tesla. This was Monday. Stock closed here, gap down. We were ready in trades. Coming into Monday, we were in the 260 puts, and the stock fell $40 in the money on Monday. So, you know, again, it's just like, this makes your week, it makes your month, and you just need a couple of these. And it's like hard to describe again what this means for people, particularly people that do have small accounts. Kershid, you might have been here late or signed in late. I went over the stats at the beginning. Again, I had last year's stats at 2024, and I had 2025 stats, so maybe you came in late. On average, it's about 70%. Sometimes it's 69, sometimes it's 73. On average, over the course of a year, it's about 70% is my win ratio. I did go over that at the beginning, but you might have missed it. Anyways, what do I mean by institutional money? I mean, again, who is in control? So the control here was the bears. The bears were in control. And again, whether you do it for a day trade, get in and out quick, or whether you buy a put and hold it, or whether you just buy a put and get right out, or whatever you want to do, okay? You get the control right. Because if you went long here, you lost. You just flat out lost. I mean, look where the stock is from here to here. Like, if you went long here, this stock, in the last month, you could not have made money. Impossible. Look at it. Okay? And again, you need the conviction to make money, and you get that from understanding why. And everyone's like, I just want a good trade. I just want to trade and make money. I just want to press the button. I just want to do it. I just want the trade ideas. That sounds all well and good. But again, I've been trading for a long time. I've even been teaching people now for a long time. And I understand the human mind and the way it works and how people are, particularly with money and when they're putting trades on. That's why the thinking process is so important to do before you put the risk on. And the moving away from fear is important too. How do you get away from the fear? If you understand why. If you understand why this is going to fall, you won't be in fear even if the trade is down until it goes. If you understand why something doesn't work, again, you'll be okay. You'll be like, well, not okay, but you won't be like, it's not the end of the world if you take a loss in something. Again, for every 10 trades you take with me, 7 are going to work, and you figure 3 are going to lose. And that's how you have to look at it. So again, you have to understand why. And human beings, we are curious people. We really do want to know why. Why is Trump doing this with the tariffs? Why is it wreaking havoc on the market? Why hasn't inflation gone down? Why are rates still high? Why do eggs cost $13 for a dozen in New York City? Like, why aren't there any eggs? Oh, that's right. They killed all the chickens. That's why. Again, we want to know why. We want to know why. Why is Tesla falling? And again, I'm looking at the chart. I'm analyzing the price, but people do want to know why. So that's where the learning comes into it, and where you'll trade better and you'll move away from the fear, okay? So again, I use a 26-point checklist. This tells me what direction to take the stock, if the gap's going to work or not, and if I even want to do it. And again, when you think about it, you're like, okay, it totally makes sense. If I go with institutional money, then the stock's going to have a big move. I mean, it makes sense when you think about it. And again, the idea of just doing one trade a day, quick in and quick out, the idea of even shorting, how you can get faster, bigger moves in the shorts. I mean, it makes sense when you think about it. So again, why gaps? Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for and trading momentum. Again, the market Monday, momentum to the downside. Tesla, big sell-off, momentum to the downside, okay? So whether you have a small size or a large size, you can get a good risk to reward then, again, if you're with the momentum. And again, I have no problem going long. It's just that there hasn't been any long setups to do that there's no institutions buying anything right now, to be honest with you. In fact, there's one of the strongest things I saw, which actually has been falling the last couple of days, but one of the strongest things has been actually McDonald's, but we're not in that long because it's not moving up right now. But that's actually a good chart. So again, we're talking about fundamentals. So next Wednesday, for some reason I was thinking it was this Wednesday. I just got the dates off in my head. I'm thinking it's next Wednesday, but the Fed made a statement Friday that created a rally in the market. Then we had data out this morning. And now next Wednesday we have the FOMC meeting. And again, I don't think they're going to do anything with rates next week. But, the market thinks that the Fed is going to cut rates 3 times this year. So we'll see what they say. And again, while you can have an interest in that, you can follow that, you can watch television, you can see what's happening, we have to make decisions based on price action in the charts. We cannot make decisions based on what the Fed does because we don't know what they're going to do. In 2024, they said they were going to raise rates 5 times. Lower rates 5 times, and they did not. And all year they said they were going to lower rates, and it took them till September to even do it once. So again, you have to make money, number one, this week, today, right now, this month. You can't wait for the Fed. They change their mind all the time. There's too many other external factors. You have to look, is the stock dropping? Is it rallying? And how can I get in this and get a move and make some money? And that's what you got to do. So a big flow of money going in a certain direction is what moves the market. Stocks creates momentum and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it actually is. And that's something that you got to be aware of. And like I said, I know a lot of people are getting whipsawed since the beginning of the year just because of a lot of things. We were sideways to start out the year even though we made new highs. Now we sold off. People are in shock of that. People think the sell-off's extended. And it's on and on and on. But, it's neither here nor there. We can make money short, we can make money going long, but it's the idea of finding just that one good one a day, and then doing it. So number one, you need a good strategy. Number two, you need a supportive mentor. So again, I call the trades live in the room, I teach the class, I do it, people follow me. It's about consistency. That's what you want to do. So I don't have Monday's trading here, I should put Monday's trading here, but 228. Here, this is actually a good example because it's kind of funny because it closed green. We shorted this here. Stock closed here, gap down. Dropped, I got in, got out. Boom, 228. Entry was 277.10, exit was 274.10, profit 3,900. This is a margin trade. You would have needed a margin account to do this trade, or you could have bought a put. You could have bought a put, got in, got out. You could have bought a put and held it. That would have worked. We did eBay. That was a really good one. Stock closed here, gap down. eBay shorted it 63.90, dropped again, trying to pull $1 out of it, got a little bit more, 5,500 profit. This was the 27th. This was eBay. Again, stock closed up here, gap down. We did it. Boom. You could have done a day trade. You could have done a put. Could have done both. Then again, this is a daily chart. So again, these are shorts. These are trades that I called live in the room, and it is all about chunking it out. You take the trade, get the move, get out. Take the trade, get the move, get out, okay? But it's like, again, we didn't do anything today. Focus on the quality, quality, quality. Less is more. The less losses you have, the more money you're going to make, and then you keep the money and the profits of the day that you have good trades. Since the market's open, could you please show one live example? If I have time here when I'm done, I'll pull up the charts and I'll show you the test that we did from yesterday. But you can go into my YouTube. I have the room up, I think, from Monday. I have their live video of the room on Monday. Want to look at it? Yesterday we did Oracle. I can show you that. I don't know if I put that in here. But we didn't do anything today. There's nothing to show you from today. There wasn't anything good today. Okay? But if I have time at the end, I'll pull it up and then we can look at the market. So anyways, people enter my trading room expecting to win. This is very different. Once you're in a mentality where you're trading or you're losing, you start to feel like you're more worried about losing than winning. You should be focused on winning. You shouldn't be focused on losing. If you are focused on losing, you should take a break. Do something different. You need a new strategy. You need to do a class like mine. You need to just shake it up because you're going to continue to get up and lose if that is what you think. It is about your mindset. I get up in the morning, I expect to win. That's it. And people log into my room expecting to win too. That having that positive mindset will help you move forward. It will help you chunk it out. Again, chunk it out. This isn't about holding everything down to the piggy target. There are things that go to the piggy target. But again, that's not every trade. You have to think about it like I always said, to work smarter, not harder. It's doing one thing and being done. It's trading in the morning, being done. Again, that's one of the reasons it's nice to trade again and work from home, because you don't have to sit all day in front of a computer. But that's why I like the shorts. Again, shorting really gives me a niche because stocks fall way faster than they ever rally because of panic that comes in. Okay? So again, the third thing you need to become successful is you need to become an expert in one thing. If you're, so many people right now, they want to do Bitcoin, they want to do crypto, they want to do futures, they want to do stocks, they want to do all kinds of things. How are you ever going to get good? Okay, again, think of sports, or even think of if you become a doctor, you have a specialty. Okay, you don't have a doctor that's like a brain surgeon and a heart surgeon and a liver transplant surgeon. No, you have a doctor that goes to school and then he does the residency, and it's 12 years and it's studying and it's going through and it's experience, and you focused on one specific thing. I mean, just think about it in anything at all. My father's an accountant, he's a CPA. He's been a CPA for a long, long time. He's very good at that. That is what he does. That's his career forever, okay? Trading is the same thing. But for some reason, people get sucked into doing lots of things because they're always jumping from thing to thing to thing to thing, looking for the next get-rich-quick thing. This isn't about getting rich quick. While we had some huge trades in Tesla, that's true. And we had a beautiful sell-off in the market in the last week, that's true too. This isn't about get rich quick. This is about, again, chunking it. Chunk it out. Chunk it. Chunk it out. Okay? The market is whippy. The market is wild. The other people on the side of trades against you want your money. You need to know that going into it. Okay? So you need to be on point. Okay? Because, again, getting back to the idea of the smart money wins. Okay? Anyways, being consistent is extremely important, and that's where it means you need to be focused. And again, I focus on stocks that are moved or controlled by institutional money. I keep hitting that home because it's really true. And again, how do I determine that? By rating the gaps. So how do you know what stock to trade each day? Get up in the morning, find the gaps. Then you got to make a list, a watch list, and then you go through and you rate them. And it's about finding the power of money. You only need one a day. So I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. Again, this is just like the chart of the year so far. We've just made a lot of money shorting this, and we were in it early. And I still think it's lower. Actually, we can look at this today and see where it's at right now. But seeing where the power of money positions are getting in is like finding a gold mine. Seeing gaps clearly and how they're creating trends, changing trends, and making momentum is a powerful way to trade. You can use this information to enter trades yourself so you can get paid along with the power of money moves. Again, I offer the support in the room, but the idea is to learn to do it yourself. The idea is to learn to read the chart yourself. Again, you got to have charts. You have to have live data. You have to have a daily chart, okay? So again, my system tells you how, what, and when. How to make money in the market. Trade a strategy and system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26 points rating system. This is what I teach in the class. I also teach the entries and the exits in the class and the targets. And then when do you trade them? Early in the morning between 9:30 and 10 when they open, set up, and trigger. And you must have a structure in place to make any money at all consistently. This is a big piece of it that I think a lot of people lack. Like I said, they're not thinking that much before they take a trade. And after they take a trade, they're thinking a lot. And they don't have a structure before they decide to put the money on and put the money on the trade on at risk. And then they're all over the place. If you want to be consistent, you need a structure. So my 26 points, that's my structure. The getting up in the morning and deciding what I want to do before the market opens, that's my structure. That's the double, triple check I'm doing on myself. And this is what I teach you. If you come and want to do the class with me and trade with me, you're supposed to do it yourself. And then you log into the room. And they say, oh, Melissa liked Oracle today. I rated that too. I liked it too. Good. Now I really have conviction, okay? The checklist tells me what to trade and what to look for each day. So again, I'm looking for a high probability of directional bias for the entire day, preferably big move in the day, early confirmation of the bias in the move between 9:30 and 10, and precise entries with follow through, and a good risk to reward target potential. So again, I think 50% in an option is good, 50% return investment. Some will be more, okay? Sometimes we don't even know how well something's going to work. Again, you get the cooperation of the market. We had a power trend day in the market on Monday. That is not that often. It's very, very rare that the market power trends in any direction, up or down, or stocks too. But we had what is called a power trend day on Monday to the downside, where everything sold off. There was very few things, if anything at all, that was green on Monday. And then again, if you're a person that likes to set goals and you say, well, I want to make this much money by the end of the year. Okay, well, you got, 9.5 months left. Figure it out. You need to make this much money per week. You need to risk this much. Okay, and you back it out and figure it out. But you're closer to realizing your dreams than you think. This is real and you can do it. I think the most difficult thing for people with me is they have to decide that they want to plunk down the money and spend the money and invest in themselves to take the class. After that, the learning part and the structure is easy, and then they see it's possible. But people have to make up the mind that decide they want to do it and jump into it. And sometimes you have to do things on a whim. You just have to just go with it. You're like, I have a good feeling about this. I'm just going to jump in and do it. And sometimes that's the best outcome sometimes in life, when you decide to move forward on a new career or a new path or a new strategy, especially if you've been in the doldrums where you're kind of stuck in a rut. A lot of people are stuck in ruts with their trading and they never seem to get out of them. And they just lose year over year over year. They lose a little, make a little, lose a little, make a little. But over the long haul, they're down. When you think about it, you really want to be professional about your trading and very practical and make decisions as if you're running your own little business, because you basically are. So again, if you come and take the class, you will learn the 26-point rating system. This is what I teach and what I use every day. So you can make 2025 your best year yet. If you want to take the class, you can empower yourself today. The class is this weekend, March 15th and 16th for March. And again, you'll learn all the pieces of the puzzle, the entries, the exits, so 26 points. The class is called the Golden Gap Course. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Class is $69.99. And again, it's Saturday and Sunday. I always do the class on the weekend, 9 a.m. to 5 p.m. Eastern Time. If you want to sign up, you must email me to get the forms to sign up. I am doing a bundle special for the spring. It is $89.99. You get 3 classes and 3 subscriptions. This includes the Golden Gap course, the Trends course, and the Gap Options course, and these 2 classes are in April. So this is a good deal. You get 3 classes for $89.99, and you also get 3 subscriptions with the package, which gives you the trading room free till the end of 2025, the options newsletter free to the end of 2025, and the market report free to the end of 2025, and 2 one-hour mentoring sessions with me, and this ends on Friday. And then, of course, the class is this weekend. Any questions about anything at all, the class or whatever? It looks like I have a couple minutes here. I can pull up the charts. Any questions about anything, though, before I talk about the market? Let's see if this works. Let me just pull this up here. Yeah, look at this. Yeah. So we got 15 minutes left in the day. It looks like we're going to close red. Oh. Or we might close break even, green. So here's what we did yesterday. Somebody want to talk about a trade. We didn't do anything today, but we shorted Oracle yesterday. I'll show you yesterday's trade. Here. This was a good one. Any questions from anybody about anything? So this is what we did yesterday. Boom. Drop. We had a beautiful exit. I could have held this a little bit longer. Low was 137.70. I didn't get out there, but I had a wonderful trade. I got in, got out, quick, done. And I did not do a put in this, interestingly enough, because I didn't think this was going to continue lower, and I'm actually lucky that I didn't. I'm glad I didn't. This didn't continue lower. So, any questions from anyone about anything? Any charts? And the market gaps while I have my charts here before I finish up. If you're interested, you can email me at melissa@thestockswoosh.com. There's no discounted price. The price is for the class is $69.99. Everyone pays it. If you want to sign up for the bundle, that's on the website too. That's 3 classes. That's $89.99. The special offer is you get the subscriptions free and 2 mentoring sessions. There's no discounted price. The class is worth it. And everyone pays it. And actually, someone just did the class in February She had a $7,000 account. Her account is up to 18 grand now. She hasn't even been trading with me a month. Again, you need to be able to decide that you want to do it. You know, accept credit cards, you sign up, you pay for the class on a credit card, you join, you start trading, and you move forward. And having the subscriptions means you get all my trades free to the end of the year. So it means you shouldn't be worried about quickly making the money back. You got the whole year, the rest of 2025 to trade with me and get the trades. And even one good trade like that Tesla could pay for the whole class. You can't think of it like that. You have to think of it like you're learning something to use for the rest of your life. Learning a system that's profitable. Again, it's amateur. If you're an amateur, not saying as an amateur, that's what I'm saying. It's people that are amateurs. That's the word I was thinking about earlier when I heard somebody on TV. I heard somebody on TV that was calling this as a bottom. And I thought, man, that's what I was thinking. That was the word I was thinking to try to describe that person. It was an amateur thing to say. But that it's this type of market that trips people up. And if you think you can't make money in a down market, that's not true. You can, but not going long. You have to short. But you have to know what to short, where, and when. And that's what I teach people. Remember, we're actively trading. We're day trading. This isn't long-term investing. And I said that at the beginning, that the market is actually still in an uptrend. Listen, have a wonderful, wonderful, wonderful day. Sun is out here in New York. If you have any questions, you can email me at melissa@thestockswoosh.com. If you're interested in up for the class this weekend, email me too. Have a great day. Have a wonderful evening. Be careful in this market. And good luck.